With an economy of more than $10 trillion in 2014, China is second only to that of the United States. The Chinese economy, which contributed about 30% to the world's total growth in 2013, has been facing notable downward pressures and slowing down to a state the government has called the new normal.
And of course, to sustain the level of growth that China had sustained or had enjoyed in the past 10 years is impossible.
In 2014, the economy expanded 7.4%, registering its weakest annual expansion since 1990. In a government work report delivered by Premier Li Keqiang Thursday, China set the growth target at around 7% for 2015, or 0.5 percentage point lower than that of 2014. Analysts and economists believe that the growth target is not only the official barometer of the Chinese economy, but also sheds further light on how the Chinese leaders plan to steer the economy.
And it would be really not reasonable to expect to be able to maintain that level of economic growth. And it's actually probably very healthy that there is somewhat slower growth.
Saying farewell to the old normal of over 3 decades of double-digit growth, Chinese officials and experts believe that innovation still functions as a vital ballast for China's economy.
China is taking steps to lower the growth rate of its economy, which is transitioning to slower growth but higher quality. To foster a new engine of growth, the government will continue encouraging mass innovation.
China's young startups have become a bright spot for the economic landscape while the country's broader economy is slowing. To foster a new engine of growth, the government work report this year said Beijing will continue encouraging mass entrepreneurship and innovation.
Mass innovation is key to decisive reforms to counter the downward pressure on the economy, just as Premier Li Keqiang has stressed. And momentous progress has been made in the past 2 years.
The number of newly founded companies in China surged almost 46% year-on-year to 3.65 million in 2014. A research by 02 IPO Group reported in late January that Chinese angel investment institutions had completed 766 investment deals last year, soaring 353% from the previous year. And the world is now pinning much hope on a grand reform agenda for the final year of China's 12th five-year plan. The agenda would indicate how Beijing boosts domestic demand amid falling exports to shore up economic growth.
And so the 12th five-year plan was very clear that growth in the future would have to come from domestic consumption and from an increase in GDP that relies on the service industries.
One of the topics of interest would be, again, the move to sort of get China's economy away from its reliance on exports and try and focus on increasing consumer demand and consumption in general in China.